Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Brian Joyce. He's the Managing Director on Nasdaq's Market Intelligence Desk. And we're going to answer that question, is it too slow to write off growth? And Brian, I have a feeling the answer might be no.
Good morning. Well, thanks for having me on. And yes, I think it is a little too early to write off growth. It's certainly been a big rotation in the last week to 2 weeks into value, but not everything in the growth space has been selling off. The semiconductor index is one industry that's still doing very well. The relative strength chart just made 2 highs, and we'll take a look at that in a minute. But so I do like the value call, and I do think on a very short-term tactical basis, it looks attractive, and maybe for some groups even longer term. But growth at this point in time, to me, still looks good.
All right, now as a technician, you go to price action to confirm your theories. Let's pull up our first chart here. This is relative strength, growth versus value. What are you watching here? Correct.
So it recently, in late August, made an all-time high again. Back in April or so, it broke out from the prior high, which was September 2018. So right now, it looks like the current pullback in the relative strength, which is the ratio of growth over value, it's just simply doing what looks to me like a classic retest of a prior breakout level. So until that level is broken, which you can see the white dashed horizontal line, which also, by the way, coincides with its 200-day moving average. Until that level is broken, I think growth still looks attractive on a relative basis.
Okay, now you brought up the semiconductors before. Our next chart takes a look at the SOX, which of course is the semiconductor index.
Right, so this is the same thing. It's the SOX index over the value index instead of growth, just to get more specific as to one industry, which has been the hallmark of the bull market, which if big momentum names are selling, you would expect to see some of them in this industry as well, and today it's making a new all-time high. Now I will say that the ratio, while it is making an all-time high today, the momentum indicator, the RSI, the weekly RSI, is making lower lows. So at the moment, it's still, the jury's out, but for the moment, price is king, and price is making new highs.
Okay, let's take a look at the healthcare sector for a moment here. Our next chart, this is a sector, while it's up on the year, is underperforming the S&P 500. What's the chart indicating to you? This is a monthly that we're looking at.
Yeah, so I don't want to say I don't like the value call. I do like the value call, and one of the names in that space is the healthcare sector, which this year is the second worst performing sector out of the 11 level 1 GIC sectors. The only one that's performing worse is energy. Now, energy is coming off 2018 when it was down 18%. It was also down in 2017. Healthcare last year in 2018 was the top performing sector, number one of the few sectors that was actually in the green. And the year before that, while it finished middle of the pack, it was up 22%. So as you can see, phenomenal multi-year run here from the 09 lows. We had a brief period of consolidation in 2015 and 2016, a triangle-like pattern. And that's what we're seeing right now again here since the highs made last October. So the long-term trend is still to the upside. Yes, healthcare is in a consolidation. It's still below last year's highs, while some sectors are making new highs and the indices recently made new highs. But I still think healthcare looks attractive.
Well, it makes sense that you're going to see that consolidation within 2015 and 2016 that was going into election. And at that time, they thought there was going to be a Democratic winner. So you can understand why there'd be some uneasiness in the Democratic, in the healthcare stocks. Moving along to the weekly. Our next chart here, are you seeing the same kind of pattern?
So what's similar about this pattern, this has an inverse head and shoulders look to it. This is very similar to the industrial sector, which my colleague yesterday was discussing. Materials looks very similar. Transports look very similar. Back in 2015, 2016, which you just mentioned, transports also had a very similar pattern as to this. Financials did a little bit as well. So this actually did have a breakout from the neckline back in June. It lasted a couple of weeks and then couldn't hold it in July and August as the markets themselves pulled back on a broad basis. But healthcare, it's starting to show some signs again of moving higher, and the weekly chart shows that the pullback in July and August, it did make a higher low, which is what we've been seeing all throughout 2019. So it's taking some time, but I still think healthcare has a good chance here to start moving higher along with other value plays.
All right, our last chart here, this is a euro versus a dollar. Of course, we have to talk about that. Just before the markets opened in the U.S. here, we had the ECB come out. So they're going to drop rates by 10 basis points. Also, another QE program for them.
Yeah, so they're putting they're putting the pedal to the metal, so to speak. They're back into deeper negative rates. If you look at their banking system, the chart of their bank index is testing multi-decade lows. So clearly, that's not the case for the U.S. banks. So clearly, negative rates is having a big headwind on the banking sector there. They still continue to go deeper. That's the stimulus that they're looking to provide. I think markets were hoping for, not that the ECB is going to announce a fiscal stimulus plan, but that's what markets want to see, a fiscal stimulus program to reignite GDP and economic activity. I don't know if going deeper into negative territory is going to help. It seems like it may just be a push on the FX, trying to get the euro down versus the dollar and maybe other currencies, even though Draghi says that's not the case, but we'll see.
Yeah, it's not going to be well received here, that's for sure.
Yeah, and so next week we have the Fed, and certainly we know whatever they say, we know President Trump will come out shortly afterwards and give his opinion on that.
All right, should be interesting. Thanks so much for joining us at MarketSite, and thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.